All right, so let's talk about the reality of blowing accounts, whether it be your own capital, whether it be prop firm's capital. Okay, so here, because we have a prop firm, we have conversations on the backside, right? So, used to be, some of you have been around the trading world long enough to know that prop firms weren't really a big deal. You know, these trading challenges available to just the average Mary or Joe at home is kind of a new thing in the last, say, 7 to 10 years, right? Before that, yes, you had proprietary trading firms, but that was for people who were willing to, go to an office every morning. And that was not something that you could just click and go with like you can now. So before, what we had then was, brokerage firms, and the incentive to own a brokerage firm in the past was, you target retiring, semi-retiring corporate person who had a 401k that they were trying to figure out what to do with, or a business person who was selling off their business, going into retirement, so they had capital, and they put the capital in an account, and you give them leverage, and they trade somewhat successfully, and then they take those wins, they get on a euphoria kick, and they double down, triple down. They say, hey, I could win really big. So they put it all on the line, right? And then the market goes against them, and the brokerage house keeps the money. 90 days. That was how long most people made it. Then people started getting wise to that, especially with this A book, B book. So what is that? What is A book, B book? A book means you take a live account and you put it into the live market, you put it into the real market, through a liquidity provider, and you don't know who's on the other side of the trade, right? B book is you take it live market, but you don't get the liquidity provider involved. So now you're trading in house. Now I'm trading against the house without going to Las Vegas, without going to Atlantic City. And so they know that on average it's going to take me about 90 days to finally say, you know what, I'm going to double down, triple down, let it all ride, whatever you want to say, and then the house is going to keep that. So everybody got wise to that, right? So then the prop firm game came up. Now, I happen to be a major stakeholder in our prop firm, but I want my traders to win because I want my traders to partner with me on my 501c3, the Praetorian Fund, and I actually want to, I just think that, once you have enough, you have enough, and if you have too much, someone's going to come and try to take it from you. So why not make sure everybody has enough that I get to keep mine? That's my belief, right? I don't want And then, yes, there's always bad actors, but that's a whole nother philosophical, political conversation that I'm trying to have right now. Bottom line is, if you take the averages, you take the bell curve, right? The majority of people are just going to leave well enough alone, let you keep your stuff as long as they have stuff. Now, those very same people, the minute they get hungry, the minute their kid gets hungry, they're going to come for you because you have what they perceive as too much. So, 501c3 Praetorian Fund aims to be a part of the puzzle that lets us get ours, have enough, maybe a little nice surplus, and then, you get yours, right? And then we take part of our profits and we help level the playing field so no one else comes, like less people are on the desperate sides so you can keep yours. That's my belief. Now, so I have a stake in this prop firm, and over time that stake will grow. Thus, my prop firm, margin power trading, I'm very big on making sure people have access to the vMAX profit whisperer, or market whisperer, so that they can be successful. But what's the model? The model on the back side is it's the same 3 months. Most people will never be able to figure it out. Most people will use lagging indicators. Most people will have a rough time even winning it all. Not our traders who have been given the opportunity to use the vMAX, right? This is how many times do you have to see this chart to realize that this is a simple leading ahead of the market indicator, okay? But still, the question comes up, how come some people still lose? And I'm going to tell you right now, it's the everyday pressures that make you want to go all in. Going all in, not a good idea. I'm not telling you not to do it because that would be financial advice, and I'm legally not allowed to give you financial advice. So I'm not. But I am going to tell you that is one of the most riskiest behaviors that you can engage in, going all in. Listen, ask yourself this question. Would it be better at the end of this year to have, let's just say that your budget, your living expense is $200,000, right? Would it be better at the end of this year to have 30, 40, 50, 60, 70, 80, 90, $100,000 of that 200,000, if that's all you can squeeze out of the markets? Or would it be better to have zero from the markets? Optimally, it would be fantastic to have the whole 200,000. Is that possible? Well, it depends a lot on you, right? Depends on your consistency. It depends on your emotional response to the markets. I have found that the best trades are the trades that you put on the trade and then you walk away. Because if you're sitting here watching the ups and downs of the market, that will probably drive you nuts, right? Here we go. Let's see what we got here. Risk to reward. Possibly lose a smaller amount to gain a larger amount. Now, listen. How long? How we look at it? We got 19 seconds on this candle. So in 19 seconds, is this going to project past that, or is it probably going to stay short? Probably going to stay short would be my bet. But again, walking away, I wouldn't have seen this. Now, oh, look at that. New candle. We're still going up. So yeah, maybe we're going to lose. But you know what? Time is going to pass anyway, right? At the end of the year, time is going to pass anyway. This is a competition trade. I think you might want to refer to my ROI video that talks about this. This is not actually, this is a paper trade competition account. My goal at the end of this account, in the next couple weeks, is to just finish off in the green here. Now, maybe I get stopped out. But you know what? Here's the thing is, I didn't double down. I'm not moving my stop loss. And now here's the thing is, now look at this. I could cut my loss right now, right? Or I could just say, you know what, this is where my loss was set. And I do see that we're in overbought territory. Maybe this is going to go back in my favor. Again, if I had walked away, I wouldn't even be watching this. At the end of the day, I got in late on this one. Maybe this, I have to learn from my mistake, right? Win or learn. So let's see where we are. All right, my friends, the UPS man is here, so I gotta go. We'll come back to this later. Don't double down. Not financial advice. All right, so UPS drops off a package. Well, I don't know if it was UPS because they were using a budget rented vehicle. So there's somebody who contracted with somebody for delivery and can't even afford a truck. These corporations got us, in this, when I walked back in here and turned on this recording, this had gone back in my favor, and we were still down. But we were down less than we are now. This little metric here, where our sentiment line has crossed over this previous zone, is a strong indicator that this would be a perfect entry. So we're going to hold, right? But the lesson that I'm trying to give you now is, one, go do what you got to do. Sitting here watching every penny, watching every tick, creates a response. An emotional response is very hard to control. The system is pretty robust. If you have to take the next several weeks to a month to watch every video that I've published, you're going to see example after example after example, including what we're seeing here right now. All right, and then you go, okay, well, that's that guy. What about me? So put your chart up and don't watch the next housewives of whatever. Don't watch the next championship game. Become your own champion and watch the charts. Watch this indicator until it's in your sleep, so that you know that you can trust. You know what, and then also listen. You got people out here with these scanners. We considered making a scanner. Oh, look, now we're in profit. We considered a scanner, volatility scanner. Where's the volatility? And then we thought better of it. All right, look, here we go. We got 87, 112. We're going to take $87. Why did I do that? I got lower because I've hit over sold once. I've hit over sold twice. So that lets me know that there's a listen, there could be more. But the likelihood is, look at that. See, you might not be able to see this very well in the video. But what I can see is that this low point is lower than this low point. So this is higher. Boom, there's the indicator that says so, right? So we're probably going to flatten out here. Maybe be a little more play. There might be a spike. But this move is pretty much over. This tool is robust. Just put on small positions. Give yourself a nice buffer before you up your position size. Take what you can get. Remember that putting everything on the line is very rarely a good idea. I can't think of any cases where putting it all on the line works out in your favor. I can consider a few that I might consider if my children were involved immediately. You just don't know what's going to happen tomorrow. So if the situation is tenable, are we all in Gucci? Maybe not. Is that a problem? Depending on who you ask. All right, so I just want to try to give you the mind space, because, bottom line is your attitude definitely determines your altitude. And if you want to fly high, before you've got your wings under you, then you're probably going to crash and burn. That's it, my friends. We'll talk again soon.